Gold started to be used as money about 5,000 years ago in Mesopotamia and Egypt, but it took more than 2,000 years to start minting it into coins. In 1821, Britain made that official, with the pound fully convertible into gold. And the United States followed suit in 1900 with the Gold Standard Act, which made the dollar, the US dollar, convertible into gold at $20.67 per ounce. And that was up to $35 in 1944, until 1971, when Richard Nixon cut the dollar loose in what became known as the Nixon shock. The US economy needed the dollar to float, preferably downwards, and so it did. Now, the normal way to look at the relationship between money and gold is the price of gold in US dollars. And here that is. Wow. The price of gold is close to a record high, approaching 3,000 US dollars an ounce, or about 4,700 Australian dollars. And demand for the yellow metal has never been higher. Meanwhile, gold production hasn't changed in more than 10 years. So why has the price of gold gone up so much? It's because a lot of people are worried about the US dollar falling, or are just worried in general and looking for a safe alternative, and they can't yet come at Bitcoin. And after all, the love affair with gold is 5,000 years old. Central banks especially love it at the moment, and they're falling out of love with the US dollar. Speaking of central banks, the Reserve Bank of Australia sold 167 tonnes of gold in 1997 for about $2.8 billion. That'd be worth $28 billion now. A 10-bagger, as they say in the share market. That'd be handy now.